Hi everyone. In this video, I will show you step-by-step guide for real estate investors or beginners on how to evaluate a property for cash flow and how to invest in real estate. Hi, my name is Kamal Mohammed. I'm a real estate investor. I've been investing in real estate since 2011, 15 years. And I have fixed flip hundreds of properties, have rentals, and did wholesaling. So in this video, I'm going to show you how to evaluate cash flow property and how cash flow works. Let's say you bought a house, $125,000, and let's say you put 10% down payment, which is going to lead your total mortgage of $112,500. And let's say you pay 6% interest to the lender. So that will be, I did the math, that will be $674 for 30 years amortization, your payment a month. Then this is not the only expenses you have for the property per month. You gotta pay interest and insurance. So what they do, the mortgage, they total all the expenses in one payment to make sure that you are paying the taxes, or they paying the taxes for you, and they're gonna add it to your mortgage payment. So, and they want to make sure the property insured, because if the homeowner didn't pay taxes, what the county gonna encumber the property, and they're gonna put a lien on it. They want to make sure that the property doesn't accumulate any liens and the property is properly insured. So they wrap that, they pay they pay the taxes, they pay the insurance, and they wrap it in one payment. So while your mortgage and interest is only $674 based on $112,500 of mortgage, they're gonna add taxes and insurance. It's gonna be in Florida about $300 per month. So your total payment would be $974. And you're gonna say, okay, then if you rent this property at $1,600 a month, then your cash flow is $526 or $626. But is that going to be it? No, because you do have to maintain the property. When the tenant have some repairs, they're going to call you and it's going to come out of your pocket. So you want to make sure to add average of $150 worth of repairs every month to your calculation before you even buy the property. So $974, they call it PITI, principal, interest, taxes, insurance. This is one payment that mortgage or the bank wrap this up for you as one payment, and we calculate that as $974. Then you're gonna add $150 worth of maintenance repairs. So that's gonna be $1,124 in total expenses a month. So with the repairs $150, that's your total expenses now is $1,124 exactly. If you rent this property at $1,600 a month, then you're gonna cash flow $476, which will be $1,600 what you collect in rent minus the $1,124 your total expenses. That would be mortgage, interest, taxes, insurance, and that $150 per month of maintenance and repairs. So you'll make $476 a month worth of cash flow coming to you every month. This is as easy as it gets as far as cash flow. They call that passive income. That's the reason why they call it passive, because it takes a minimal amount of work. Most of the work that you're going to be doing is upfront, doing your math, doing your calculation, learn, make sure your numbers are correct. Make sure you don't buy something that need more repairs than you expect, because they're going to eat up your profit. Okay, some may ask, what if I want to hire a property management company? How the numbers gonna work? Then, typically, property management company, they charge 10% of the rent collected, meaning of the example that we brought earlier. If you charge the tenant $1,600 per month, they're gonna charge you 10% of that. That's $160 per month. They're gonna charge you as a landlord or investor for your investment property. Well, the number is gonna work. Last number we were at $476 cash flow from your investment. So you're gonna take $476. You're gonna take $160 off of that. They're gonna leave you for $316 every month cash flow. Some people prefer to hire a property management company if they don't have the time. If they are busy individuals, they just have full-time job and they just don't want to receive phone calls from tenants calling about, plumbing problem or something when the air condition. We live here in Florida in the summer it gets really hot, where it's a common thing, air condition breaks down a lot here. They don't want to receive phone calls all the time, so they hire property management company to manage their property for them not to be wasting their time. Now, if you want to hire a property management company, you want to make sure the company are really good. It's really good. I mean, you just have to make you do your due diligence about the company you're hiring, because they're gonna dig into your bottom line. If the company, for example, listed the property for rent and it takes them a long time to occupy or to put occupants on your rental, that's gonna come out of your pocket. But guess what? Because the payment doesn't stop whether you have a tenant or not. Your mortgage, your utilities doesn't stop. Your mortgage, interest, all the stuff that we mentioned, your expenses as a landlord every month doesn't stop. So you want to make sure that you hire a good property management company to fill out your property quickly. Okay, would that be the only benefit? You benefit when you have a cash flow property generating cash flow to you every month? Well, no, because there's something called equity. Let's say in the same example that I brought to you here, the property that you owe $500 in mortgage, let's say it worth now, because you added value for repairs, it worth $180,000. Now you have equity in the property of exactly about $68,000. Your equity in the property, meaning if you sell a property tomorrow and you list it on the market, your profit would be, gross profit would be $68,000 minus expenses for closing. You're gonna pocket at least $55,000. But your equity on the home, it's $68,000. That's another benefit that you have on your property, cash flowing properties, or any property that you buy and you add value to it. That would be your equity to the property. You could do cash out to buy another investment property, and that's how you scale in the cash flowing business in real estate. If you find this video helpful, if you want to watch more videos, please press the subscribe button and like this video for you to watch more video coming up. This way you don't miss any video coming your way. Thank you for watching, and up to the next video on how to make money in real estate.